Yeah, so in terms of what advisors are looking for and sort of the struggle that folks have on the retirement side is how do you generate a significant or an interesting capital return and grow your wealth over time, but also manage your way through a lot of the volatility that's going on in the markets today. And one of the ways that we're looking to achieve that, and one of the ways that we're looking to invest is to have a solid dividend stream. And what that dividend allows you to do is it gives you a baseline of compounding on the bottom, and then to the extent the company's earnings continue to shine through on a top line basis and through the entire investment, that gives you upside potential on top of that dividend stream. Yeah, so I think a lot of people, again, they focus on the U.S. markets. That's what they're familiar with. That's where they've invested, over a long period of time. The U.S. markets have done incredibly well. But what you don't get by solely investing in the U.S. markets is diversification. And by eliminating all those international companies, you're eliminating half of the listed companies globally. And there's some fantastic opportunities for companies, to invest in companies that have great dividends and great compounding and great quality of their types of businesses. So, we did a little chart that we had included in the presentation earlier. 171 businesses from the international landscape had outperformed the S&P 500 over the past 10 years. So it's not as much about investing in the market in total. Yes, the US market has done better overall, and there has been some really punchy, good, solid performers there. But from an international perspective, you can find those individual companies that have exceptionally strong performance and they diversify away from kind of that US risk. And on top of all of this, if you think about the US markets, they're becoming increasingly concentrated as well. So if you think about the S&P 500, the top 4 companies from the S&P 500 account for about 20% of the index. So to say that you're buying a broad-based, ETF, for example, and you're not taking specific risk on companies, you're almost kidding yourself because you're taking such a concentrated bet on those 4 businesses. Yes, they've performed exceptionally well over the past 10 years, and they might perform well, going forward, but how about we diversify that down a little bit? What if those businesses do roll over? You want to be able to get some good performance and some good capital appreciation from other areas. So again, that's what we're looking for from that perspective. And from an international standpoint, you get, again, these fantastic dividend growers with sort of unique situations that can't necessarily happen within the US. Yeah, so in terms of what to find, we deal, at GQG, we deal with large liquid, companies globally. And that's where we look for. We want to be able to have the ability to be nimble, and to the extent we want to change the portfolio look there. So while the globe seems like a massive landscape in terms of the total listed securities that are out there, when you actually constrain by increased liquidity and increased size and market cap for the large, well-performing companies, and you constrain for quality, it actually limits that universe down to maybe about 450 to 550 companies. And what we do from there is we go through on a fundamental bottom-up basis, we go and find the best performers on this sort of concept or principle of forward-looking quality. So it's not about, when you drive down the road in your car, you don't drive down the road looking in your rearview mirror to try to see where you've been. You drive looking through the windshield to see where you're going. And that's how we look to invest with a lot of these international businesses as well. Where are the pieces from a business perspective, where are the pieces coming to place so that they can be an exceptionally high quality performer going forward, not necessarily just focus on, okay, how have they done historically? You do your homework and you kind of look out there because there's a lot of risks inherent, challenges that come with international markets, things like foreign exchange and different tax treatments and things like that. And that's something that we look at on a day-to-day basis. So finding an advisor or finding an investment manager that knows the landscape, knows how to deal with these, has experience dealing with these sort of issues, and then also has a track record of actually finding these high-quality compounding types of businesses and shows the ability to navigate their way through different types of market environments, markets where interest rates are low, where they're high, inflation's high, low, and different types of challenges there. So really kind of finding an advisor like that. We think we offer a compelling solution in that regard. We think that our team being based here in the US, but having expertise in the emerging markets, US markets, international, the same team looks at all of those categories in terms of our investments. We think that helps us take a step back and look at the forest for the trees. And that's really what it's all about when you're looking at investing. How can you find sort of those best and connect the dots between all those different investment opportunities that are out there?